The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the February 13th, the terrific Thursday or Thirsty Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary day. And the easiest way to do that, well, is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. But hey, if you can't get to the phone, we've got you covered there. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And of course, inside our Tigers Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got a little bit of a mixed market out here. The Russell 2000 is the strong dog. It's up 1 full point, while the Dow is off 81, S&P down 3, NASDAQ off 12, the semis are flat, New York Stock Exchange off 27. So we have things to look at. Spot volatility index is trading up 55 cents at 14.29. I believe that is still below the 50-day exponential moving average. We'll take a look at that. Gold's up 7.50, silver nearly 12 cents, light sweet crude 21 pennies. Natural gas is flat. 30-year Treasury is up 16. It takes about a half a point. Tesla is a leader dollar-wise, the upside 33 points. HubSpot up 14 or 8%. Equinox 11, nearly 2%. West Pharmaceutical Services up $10 or 6%. Huntington Ingalls Industries down $19, a little over 7%. Zebra Technologies $16, a little over 6%. Cadent Inc. up 10% or $11. Decipher Pharmaceuticals off $10. Number of the stocks moving down percentage-wise, off 15% out there. Of course, I want to look at what you want to look at. And let's do it first, just kind of the market. Let's just get a feel for what the market is doing or what it did, try to answer questions. Then we'll go to some of the requests that came in, one last night and I believe one this morning. So if we were to take a look at each of the equity futures contract. Let me pull over. This is a daily time frame chart. This will just kind of sum it up, right? We talk about Stevie's green line or red line. Right now it's the green line, and how important is that? And what we saw last night take place was nothing more than price pushing down and testing that support level. Presently, inside the ES Mini, that number is at 33.57. In the NQ, it's at 95.31. And inside the Dow, it's at 29.278. Remember, like I had to sit back and try to figure out, how can I make a determination of when a price move to the downside is nothing more than just simply a retracement out there. And let me share with you, without Stevie's green line, I'd be dead in the water. I would not have been able to have said to subscribers this morning, as I analyzed the market for them, that this looked like a buy the dip point out here, because no matter what we looked at, with one exception was the spot volatility index, everything was saying this was your buy the dip opportunity, or another buy the dip opportunity. There will be many more that are out here, and you can use Stevie's green line as one of those things to focus on, pay attention to, because now if price is trading below that, a little different scenario. We might have a deeper retracement going back to some other level of support out there. If we were to take a look at that NQ, I'll pull over the NQ and take a look at its 30-minute time frame. We also, you and I, like to take a look at breakout or breakdown areas out here. And in the case of the NQ, we had a breakout area at 95.34. In essence, that is where price pulled back to. Yeah, there was some deeper moves below that. The emotional, remember, you and I are looking at the body of the candle. There was one body of a candle that closed below that level. Let me take a look at, actually, you know what? this NQ chart is not the chart we want to go with because I found an error on my original programming on NinjaTrader 7 that is not there in NinjaTrader 8. Let me pull over this tool because this is actually more correct out here. So my apology, but I caught myself. So now this is a 30-minute time frame chart. This one now may be the same level that was picked up, the 95.34, but with regard to current counts and so forth, I didn't want to make sure that we were dead on balls accurate. But we can see that there was and that's a line from my cousin Vinny, as you know. And if we take a look at, there was one close at 6:30 last night below that breakout at level 95.34. Use Stevie's method of 2 bars below or above support or resistance. That's usually a good signal. And what it does, it avoids the so-called fake out. The fake breakdown or the fake breakout. In this case here, what price has now done is it moved up. This is the 30-minute chart for the NQ. This is that's right, posi traction, baby. This thing, what this has done so far, we got a short-term top inside the NQ. Or what we can say is that it peaked out at that TD 9 count pattern. It was the bar following number 9 that has made that high thus far. But price has also pulled back to one area of support, and that is the center of that box at 96.03. Another level of support would be 95.91, and any close below that, we'd be looking to move back to about 95.24. But what was taking place last night, this is the point out here on a 30-minute time frame chart for the NQ, is nothing more than just simply coming back to support. If we take a look at the 120-minute time frame, all price was doing was coming back to support. The breakout support, 95.38 and a quarter. If we take a look at the 5-hour time frame chart, all price was doing was coming back to support. In this case here, it was the bottom of its profile out there. On a 4-hour time frame, all price was doing was coming back to the bottom of the profile. So in essence, to help answer, if you're sitting there saying, well, now, what started the futures moving lower last night, some piece of news or what have you, algos kicked in. But all you really want to be able to do is understand where is support or resistance. There's perhaps nothing more important than understanding where support or resistance is, because if we don't, then how is it that you and I can analyze and understand what the market or the chart time frame that we're taking a look at is, and how we're going to be able to figure out what it's communicating to us? Support and resistance. Perhaps the most important, not the most important, because being able to identify tops or bottoms is just as helpful. But you've got to know, you can identify tops and bottoms all you want, but if you don't really know where breakout support and breakdown resistance is at, and I would totally suggest that as powerful as swing points are, they are not nearly as powerful as understanding where an instrument broke out and where an instrument broke down. And if you'd really like to understand those tools out there, just subscribe to Mastering Probability, even if it's only for 29 days. There's a series of videos out there that show you step by step exactly what to do. So you can look. I've got subscribers. They are programming software to match many of the tools that I use here. And when I have communication with them, they're always sharing with me how much this has helped them improve and to understand what the markets are doing. All I do for that timer digest, folks, is just communicate what the chart patterns are communicating to you and I. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we have a series of questions that have come in. So let's get right to those. The first one coming in last evening from Mark. Mark says, can you take a look at ExxonMobil? So let's go do that. So here's the chart for Exxon, or charts, I should say, Mark, or the first charts we'll look at for ExxonMobil. We've got the daily, weekly, and monthly timeframes up, and we can see that ExxonMobil is trading below the levels of support created by their TAS market profile. So there's no support from a TAS market profile standpoint inside of ExxonMobil daily, weekly, or monthly. So now what we need to do is we need to start going around and seeing if we can identify any kind of bottoming patterns out here. Now, if we take a look at the daily time frame chart, let's go ahead and populate this. I do have this forming wave number 7. Forming wave number 7 back here on February 10th. And so that is a bottom signal out there as long as price does not, in fact, move below that. There's also a TD9 count bottom that formed out here on February 4th, and that low has held. So I've really got two signals that it's trying to form a bottom. What ExxonMobil now needs to do, Mark, in order to confirm that, is price must close above Stevie's red line. That's currently priced at 61.06. If price can close above Stevie's red line, odds favor a move to one of 4 levels: 63.98, 64.56, 65.73, and the most likely level, 67.70. But each of those other levels are areas of potential resistance. But we don't have to worry about resistance just yet, not until price closes over Stevie's red line. 61.06 is the number. That's what I'd be watching for. The weekly time frame chart, what do we have here for the weekly time frame chart? The weekly time frame chart doesn't give us any real bottoming signal at all. Let me pull this back a little further, see if there's so I got no real bottoming signal at all here. The monthly time frame, let's see what we have here. 59.72 is the monthly breakout area. And the low so far that we have seen this week, let me see if I can pull this up here, is 59.62. Voila. So here's what we would take a look at. So we've got those bottoming signals, Mark, on the daily time frame. We know what price needs to get above in order to really say, okay, at least we have a rising price oscillator. But we also know that prices come back to what should be some pretty major support. That is the breakout level on the monthly time frame. It is not the swing point. The swing point would actually give you a price range of, or a price level of 55.94. But since price has already come back to where it actually broke out at 59.72 out here, its work to the downside may be done. So if you're looking, I don't know what your time frame is. If you're looking to get in on a long trade inside of ExxonMobil, wait for price to close above Stevie's red line. Presently, that is priced at 61.05. That number is going to change just slightly, so you're going to need to, call it 61, I don't know, and a quarter or something like that. So thanks for writing in. I hope that helps you out. Sat P writes in, wants to take a look at ticker symbol VEEV out here. Now this will take just a moment to go ahead and populate. Says, good morning. I have a few shares of VEV. Please suggest the resistance levels and an exit price out here. So what we can take a look at, this is the daily time frame that we've got. The daily time frame here, we can see that price is trading above Steve. First, with regard to breakdown levels out here, if we take a look at what VEEV did, was it came right back to its breakout area. And that was at 138.20. The last time that it tested that was with a nice little hammer candle. That was on December the 30th. Since then, it's made 4 wave counts, letter D. And all that did was create a little bit of a slight pullback for a day or so, and was really just testing Stevie's green line. So as long as price is above both Stevie's green line, which it is, and the top of that daily profile, then its real next resistance area should be about 170.35. You're only 155.51 right now. That is the daily resistance out there. If we take a look at a weekly time frame shows that price is trading above its daily profile. 170.35 is its number that it appears to be targeting. And on a monthly basis, what do we have out here? Support held. That was the bottom of its monthly profile, 139.10. Needs to clear 158 to be able to get up into the 176 level. But I would take a look at those daily and weekly areas, that 170.35-ish type area. Sat P, I hope that helps you out, and best of luck with VEEV. We've got another question. Oh, this looks like a longie out here. This is from Sylvia. Let me get the ticker symbol punched up here. It is NVTA. I don't know what they are. The symbols I can only get the symbol up on this my white background chart here versus the name, but that's okay. It says sold out because I was concerned on lessening volume. So on this chart, these charts here that you and I are looking at, you've probably gotten the gist out here. I'm not looking at volume at all. Period whatsoever. Yet if you ask me about my conviction behind price moving back to support or moving up to resistance or what the charts are communicating to us, I have tons of conviction in there with regard to what the markets are communicating. I'm not saying don't use volume, but there's other matrices. There's other tools out here. So volume I used to have. I probably could still find it. If we take a look at markets out there, it's like a table. There are really 4 pillars to making up a understanding what the markets are communicating to us. And volume is only really one of those aspects. But you'll notice rarely do I go back and use volume? We have enough guys here at TFNN that will use volume and give you their analysis. Instead, I want to use some other tools that are really helpful, really special in helping us to identify where price is going to. So this is, so I sold out at NBTA because I was concerned of lessening volume as it went up to profit more. When do you suggest to re-enter? Well, in this case here, I don't know where you sold out of this, but your re-entry points way down at right now is about 23.03 out there. When price cleared 21.97, that was the breakdown level. That was really your key that this wanted to move higher out here. Because if this was just a trading in a range, counter trend rally, anything along those lines, 21.97 should have stopped it in its track. And I'd rather focus on this, Sylvia, because this is then telling you that its trend is changing, that it's gotten above a resistance area out there at 21.97, and it did this with a wide-ranging bar. My guess is there was volume behind that move. Now, the day specifically that I'm looking at is the day of February 6th out there. So you were in a good trade. Look, there's never anything wrong with taking profits out here. It really looks like this is going to head all the way back up to its highs out here at 28. In the 2870-ish area. If I look at the weekly time frame chart, let's populate it, see what we see out here. So 2740 is its next resistance level. We can see how this tops with on a weekly basis, a TD9 count. Rhodes momentum indicator signal, wave number 7 out here, the whole kit and caboodle. And what's price do? Well, it gets back to a breakout level 13.99 where it forms a nice hammer candle back in November. But right now, you can't get in right now at 26.53, knowing that 27.40 is a resistance point on the weekly time frame out there. So hopefully these tools and what you and I look at will assist you. You can draw, you can create, you can manually do this, especially on an instrument that you're in. You can manually, I've got all this stuff now auto-populated after spending thousands and thousands of dollars, let alone who knows how many hours in it. But you can figure those levels out on your own out there. I know you can. And use those to your benefit out there. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 64. S&P is flat. NASDAQ is flat. Russell's up a couple. Semis are up a couple points out here. So let's go to our next question. Next question coming in from Lee. Lee writes in, and he has taken a position, took a position yesterday in ticker symbol NAK out there. And Lee is looking for just some technical analysis on it. So you got to love today's action out here, Lee. Today's action has taken out 3 breakdown levels. 54 cents, 58 cents, 59 cents. Really a fourth one if I go back even further out there. But really the key levels here that we're taking out were really the 58-cent area. And you've got a wide-ranging bar. So that's a beautiful thing. Now, you're in wave number 2. There's an A to B equals CD to the upside, but with this wide-ranging bar, that doesn't look like that's certainly not finishing here today. And so where is this headed to? Well, let's go to a larger time frame for you. Let's go to the weekly time frame chart. And the weekly time frame chart, although I don't have any bottoming pattern, we're not really focused on whether this had a bottoming pattern or not. The mere fact is you're in it to win it. And now you're trying to understand where is resistance. Well, the next resistance level is coming from your weekly time frame, and that's at 92 cents. Prices tested that area back in August of last year. August weekly time frame chart. You can see how that level held. So that's going to be your significant area of resistance, 92 cents. I'm not saying that it can't get past it. It can. That's just simply your next resistance level. If it can get past that, the monthly chart has got $2.30 out here. So that's what I see with regard to ticker symbol NAK. By the way, when it did bottom, it was with a TD setup 9-count pattern. That was bar number 8 on December 13th, bar number 9, which was a higher low, formed on December 16th out there. So Lee, best of luck with that trade. I love it. I like it. I especially like today's action. Let's go to Max. Max writes in and he says, I'm looking to go long the 650 dust calls with expiration the end of February out here or in the first week of March. What does your analysis show with regard to gold? So let's put up the gold contract here. Let's go take a look at it. We'll take a look at the daily time frame out here. I know you're looking at dust, and I know you really want information on dust, but really, quite frankly, if we don't take a look at gold because of the directional correlation, I will not do you justice. And I have no interest in not doing you justice. If you take the time to write in, I'm going to give you my best stuff. Now, part of my best stuff says, come on, keyboard and mouse, work here. So here's what we know, Max. Gold is trading with inside what I'll call a consolidation of sorts out here. It's trading between support and resistance. And resistance is 1583.70. It's almost made it up to that area out there. So if you wanted to take a short trade, then go for it now or wait for gold to get up to that 1583. The problem is it might get up there overnight and you won't be able to put on the dust trade out there. But support hasn't been broken inside of gold either. And that's at 1546. So it's really inside this little range out here. And so it's almost as if now there's 3 topping patterns inside of gold. You've got the TD9 count. That occurred back here on January 8th. Wave number 7, that's letter G on my screen. That also occurred out there. And then we've got the Rhodes Momentum Indicator top. That formed on February the 3rd. So plenty of tops out here. But it's really just consolidating. And here's really the rub, so to speak. Here's the danger for you trying to take a short, which means entering a long trade in dust, or even shorting gold. Here's the issue. Well, let me find it. Just give me a moment to find it on my bottom tabs out here. It's really not going to be this chart, although it could be that chart. But it looks like gold priced in euros is at another new all-time high today out here. Granted, it's a currency issue, but it's still, you own gold in euros. You're not a seller. I mean, you're only a seller, Max, if you really believe that there's some kind of top tick out here. What I was trying to, no, it's not the PTR chart. Where is it? Give me a second here. I know it's here. I don't think I have closed it out, but I could be wrong about that. Okay, it looks like I was wrong about that. So what I was going to do, I'm just going to have to come back. Oh, here it is. Here it is. So this is a longer-term chart. So I wanted to give you this longer-term picture. Now, gold priced in dollars, left-hand panel. Gold priced in euros, right-hand panel. It's at a new all-time high. We just covered that when we looked at the daily time frame out here, but you can truly see it. Take a look at gold priced in yen. Basically at an all-time high. I mean, the all-time high was made last month, just a few days ago. What's today, the 13th out here? And gold priced in pounds doesn't look so bad out here. So I don't want to give you bad advice. Does gold and dollar priced in dollars have some topping signals? It does. But you've got buyers, which seems like with both hands, as far as gold priced these other currencies, Max, and I don't like the trade, knowing that, because you really, when you want to trade an instrument, especially a commodity like this, we must. It is incumbent upon you and me and everybody else, when we take a look at things that are going on around us, to try to piece together the dots, to try to piece together the puzzle. All you hear, it was like at 6:30 last night or 7 o'clock when I finished dinner, and I came back and I took a look at the futures and saw that big move to the downside out there. Was all that I could find on the news was it was all about the coronavirus. And not that that's a bad thing out there. I mean, not that it's not terrible and you got people dying. I really don't know how that, quite frankly, compares to just the flu that we have right now in the United States. But the point is that CNBC is doing a special tonight. I mentioned this to a couple of people inside the den privately this morning. I've watched CNBC do these specials. Not that I watch the specials, but whenever markets seem to be falling apart. Now, our markets are certainly not falling apart out here, but whenever they seem to do these shows out there, they have an uncanny way, and it's usually when markets are just careening to the downside out there. They have an uncanny way of being able to identify the bottom when they do those shows out there. So, look, what's the point that Stevie was really trying to make? And we make this when we take a look at instruments like this, all of these instruments. We try to understand where is money flowing. Now, this was through yesterday. I'd have to update it because we're 30 days into it. But money must flow somewhere. Money is not going to evaporate. And yes, China is closed down, and people start thinking about the contagion, so to speak, and the economic impacts of it. But the reality is here, with regard to a market of stocks or commodities out there, money is going to flow somewhere. Now, if it's you and you're managing your client's money, whatever it might be, you've got to think in these bigger pictures out here. Are you going to go ahead and put that money? You got free cash, not free cash, but you got cash. You've got to put it to work. Are you going to put it in China? Are you going to put it in any part of Asia at this stage of the game with everything that's going on? Are you going to put it in Europe, where the euro is just cascading to the downside? It's taking out key levels. Where are you going to put it in the UK? Well, they're just figuring out their Brexit stuff. Why do you think it is the Qs in the U.S. markets and stuff that are leading the markets higher? Money has to flow somewhere. You know what I suggest? We can see where it's flowing just by looking at who's performing this year. And here's about 90 different types of ETFs. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's the Dow New York Stock Exchange. Transports are the only ones that are in the red right now. Let's go to our next question. This one coming in from Don. Hey, Don, how you doing? Don in Odessa, Florida. And Don wants to take a look at the IWM. So we'll definitely do that. But let's begin, Don, by taking a look at the equity futures contracts out here. No new profiles that have formed. What we know is that the ES, the NQ, and quite frankly, the Dow equity futures contract all above the top of their profiles. So what that means, Don, is they're in full breakout mode. All breakout mode. I don't care if the Dow is red. It's above resistance, which is the top of its daily profile. The only one that's not is the Russell 2000 equity futures contract. It's made a higher high, so it's taken out yesterday's high. It's above the weekly profile. Today we looked at, and it was the pullback inside the Russell was nothing more than a test of Stevie's green line or support. So if you're asking me with regard to an analysis, where's Russell 2000 headed to, it should head to at least test or take out the top of that daily profile, 1707. If we take a look at now, before it does that, it's got one area of resistance, Don. So I don't know if you're in the trade, not in the trade, but there's a level that price must close above in order to make that move. And that's that breakdown level. You see, what the Russell 2000 is doing, it's really trading in between a consolidation of support, the 16-16-30 area, the TD 9 count breakout level. And by the way, when this bottomed was what the TD 9 count pattern was, bar number 8. And now what price is doing, it's trying to make its move up to that resistance level, 1697.10. Just as with, and I forget the symbol we were looking at, and I don't have it on my phone anymore, but we were looking at somebody who entered into a stock, was about 55 cents or something like that, and it had gotten above. It was going to look like it was taking out two resistance areas, and we could say, okay, this thing is now moving higher. Well, the same would be true with regard to the Russell 2000. So would I suggest that you enter a trade here at 1694 inside the Russell 2000 with 1697.10 could be resistance? The answer would be no. Now, on the IWM on its daily time frame chart, let's go see, if it's got those same breakout and breakdown levels. And the answer is it doesn't. And here is really the importance of being, even if you don't trade the futures, accessing the futures is going to immensely improve your overall trading and understanding what the market is communicating to you. Because the underlying instrument ends up really being the instruments that only trade for 6.5 hours. I'm not talking about you can buy the IWM or TNA or something like that, in some pre-market conditions or post-market conditions. We're just talking about the general market out here. And so because you've only got 6.5 hours worth of data versus 23 hours worth of data inside the Russell 2000. Which one do you want? Yeah, you want me on that fence, right? I think you do. And so you've got to, or you really should be getting access to that so you can take a look at where the resistance, because I don't have that same, if I were just to look down and just at the IWM here, we would say it's a buy. But now, and I still believe that's the case, but it's the equity futures contract is running up towards resistance. So that's where I believe you've got to make your decision out here. It's not right here, right now. It's not by anything that I could show you inside the IWM. It's really with regard to the Russell 2000 daily equity futures contract. Now, that's what the daily time frame looks like. Let's just see what patterns are on a short-term time frame out here. And by short-term time frame, Don, we'll take a look at a 30-minute chart, see what the 30-minute time frame is communicating to you and I. And, you know, what it communicated to us earlier today was once price closed above 1686.20. That was its TD setup 9-count breakdown level. That was telling us that it wanted to reach the higher price. So we looked at the daily time frame. We know where that higher price is at. And if price can close above that, then, you know, and you're in the trade, look, if you're in the trade and you're long, you really want to see it close above that. That would suggest that the Russell 2000, the IWM, would be heading for higher ground. So I hope that that helps you out. Now, of course, the other thing out there that's just overall good for the markets would be that spot volatility index. So let's step in for a second, take a look at it. And right now it is presently underneath the 50-day exponential moving average. That is 1437. We're trading at 1404. And a second day's close below 1437 would be instructive and helpful, although it's not taking out yesterday's low. So how instructive can it be? I don't know. But look, closing below the 50-day is a good sign that the spot volatility index wants to make its way down to the 1242 area. That's the bottom of its 50-to-1 Bollinger Band. So I hope that helps you out. Thanks so much for writing in. So that's good. We got through all of the questions out there with about 3 minutes to go before the next break. So what do you want to take a look at? Let's go take a look at that New York Stock Exchange. That New York Stock Exchange out here, we've got, well, it's above, its advanced decline oscillator, I should say, is above its zero threshold area, or 2813. So it's still in the hands of the bulls out here, even though it's trading just slightly lower. But that still looks good. Equal weighted versus non-equal weighted. The non-equal weighted SPY at a new all-time high, as is the equal weighted ETF. The equal weighted QQEW for the Qs out there, new all-time high as we speak right now. On a closing basis, because we're using line charts out here, the same is said about the Qs. All of that bodes well. Apogee and perigee. It's perigee out here. What a beautiful thing. What a beautiful thing last night as the markets were moving lower, and you take a look at the NQ out here, the NQ getting down to a low last night of 95.11. And the key area of support there was 95.05. So, yeah, you got the NQs at new all-time highs, the ES Mini new all-time highs, the Russell 2000 not at new all-time highs, but it's above we've already covered that. The Dow just a little bit of a laggard out here. So we've covered gold. We've covered. What else do we want to cover out here? That would make sense. Natural gas. So natural gas, really kind of interesting out here. Still struggling at its gap to the downside area from Sunday evening. Last night's close was basically right on it. It looked like earlier this morning that what natural gas was going to do was going to break above that, close above that resistance level, and it hasn't. What does that mean for natural gas? Well, let's do this. Let's take a look at the short-term time frame. Let me do this, pull this chart over here. Well, that's the wrong one. Shoot. I know what I can do. I can pull over this set of charts here. Let's go see. Oh, it's not going to give me everything. Sometimes you can't have everything. So buck 87, 1.8750 on a 30-minute was a breakdown area. You know, if natural gas is pulling back, this would be bullish. The bullish sign here would be pulling back to and holding 1.792 or 1.793. Maybe price doesn't get back below 181. But that would be getting back to 1.793 and holding that level. That would actually be bullish. That's its most recent TD setup 30-minute 9-count breakout level. It's Steve Rhodes with TFNN. We'll be back in just a few.
Basil Chapman will be hosting a 90-minute live webinar for subscribers to his daily trading service, The Opening Call, Thursday, February 13th from 4 till 5:30 p.m. Basil will host his live webinar titled The Dark Cloud Cover, an Essential Market Analysis. In this 90-minute webinar, Basil will discuss the techniques he uses when identifying market downturns using his Chapman wave, including how he uses specific ETFs like the SMH Semiconductor ETF as a canary in the coal mine leading indicator when looking for market downturns. By identifying particular weaknesses in the market technicals, Basil's able to identify the severity of the market reaction, and this is just one of many topics he'll be covering. To sign up now for the opening call, visit the front page of TFNN.com. Don't miss out on this special 90-minute live webinar with Basil Chapman, Thursday, February 13th. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. Folks, we've got a request to take a look at Lam Research. Lam Research actually happens to be up today quite a bit. Where is it? LRCX up about $8 or 2.5%. So let's go take a look at the Lam Research chart, see what it is that we see out here. We can see prices moving higher, doing it with less relative energy out there. We can see it's extended, meaning we can see the Rhodes Momentum Indicator signal out here. And it's either in wave number 7, letter G, or number 3 out here on a daily time frame, but no reason to exit this trade as I see it at this stage. It's above all resistance. Stevie's green line, the top of its daily profile. That's on the daily time frame. The weekly time frame out here for Lam Research. Let's go see what we see. Well, it looks like this week is going to break. Well, it's going to be bar number 9 of a TD setup 9-count pattern out here. So it's got the potential of a top this week or next week, the potential of a top out here. So keep an eye there. On a monthly time frame, I wouldn't sell it, though. Not at this stage here. I'd need to see some level of support being broken. And on the monthly time frame, we're in wave number, looks like either 3 or 7 out here. Letter G. Excuse me, price moving higher, doing it with less relative energy. Has it been trading long enough to get the quarterly? We've got a quarterly out here. Quarterly takes us into wave number 4, letter D. Price also moving higher, doing less relative strength. Let's summarize this. Lam Research moving higher today, above all kinds of resistance out there. No reason to sell this. If you did see it close below about 327, well, then you could be in for a pullback to 321. 299.57. But right now, I would stay with ticker symbol LRCX. Well, folks, that's about the end of our time today. Hey, our good buddy Basil Chapman is doing a workshop at 4 o'clock. As you see, when I give you analysis of charts out there, that is one of the tools that you and I look for. My recommendation is to get as much education as you can. So go ahead, sign up for his newsletter, go to that workshop, and I know it's going to be well worth it. Stay tuned. We've got 2 great hours left. We've got David White, our favorite polar bear, up next. Tom O'Brien from 3 to 4. And Stevie's son. Well, I'll be back with you tomorrow on Fantastic Friday. Have a terrific Thursday.
Basil Chapman will be hosting a 90-minute live